Listen, we're kicking off June. I know, Jason, some strategists think could get kind of bumpy here in the near term, but let's get your take, Jason. What do you make of this market, where we are, and where you think we're headed?
Yeah, I think now that earnings are over, ultimately the market's going to be focused on the economics, right? And you're starting to see that in volatility both Friday and today. And clearly the last day of the trading month and the first day of the trading month don't tell a lot. But I think investors should brace for volatility as we look to the summer.
That seems to be kind of the conventional wisdom right now, Michael, that we're going to get this volatility coming. Do you think that the volatility is justified, or do you think some of the recent pessimism that seems to be creeping into the market recently is justified?
Yes, and thanks for having me, Julie. I've seen some headlines too about a little bit of a liquidity withdrawal in the month of June. And even though some people say, sell in May and go away, I think, the seasonal tailwinds typically actually go through July. So I'm not really too concerned about the summer or even through the end of the year. I think the economy has enough underlying momentum, and there's a lot of fiscal support from all the government spending such that we can make it through the end of the year without a significant deterioration in the economy.
Jason, let's get to some areas you like right now. One is utilities. How come, Jason, walk us through why you see opportunity there? Is that more defensive, or is it kind of a mix of defensive and offense that you're seeing as kind of a way to play that mega trend of AI?
It's a great question, Josh, and it's a mix of defense and offense, right? My favorite type of playbook. And ultimately with utilities, if the economy continues to soften, as we saw in some of the numbers last week, and of course this morning with PMI, utilities can be a great defensive play within portfolios. They're high dividend yielders. Those should look more attractive if the Fed, in fact, cuts interest rates this year. And who knows, my call is for one cut for the Fed this year. But I think it's about a global macro play, really talking about the offensive. There's such a strain on our grid system, thanks to obviously the AI boom, EVs, and ultimately just a robust economy. So I think utilities can be defensive within the portfolio, but also play that offense despite the rally we've already seen in the sector.
And Michael, I would call the picks that you sent to us defensive E, maybe, or, they're not necessarily big growth stocks, right? So let's take, I'm going to look at Honeywell for a minute here, because, an industrial has some cyclical characteristics, but how are you viewing it, and where does it fit into your strategy?
Yeah, absolutely. So Honeywell is a high quality industrial conglomerate, although more recently has announced plans to refocus and it reorganized its business segments. And so, kind of looking forward, Honeywell is just very well positioned to benefit from the industrial renaissance that we're kind of seeing in the U.S. with a lot of the supply chains being moved back onshore. So that's a nice tailwind for them, for their building automation, industrial automation, and also their renewables segment. And just in terms of them trying to play AI a little bit, they recently came out with Forge and rolled that out. So right now that's just available to their building automation segment customers, but that's a cloud-based software platform that's tailored to deliver customer-specific AI data insights. And so that's early days for that, but it's something that could be rolled out to the other customers in the other segments over time and be a nice tailwind for earnings.
And Jason, back to you, another sector I want your thoughts on. You like financials here. It sounds like, Jason, in part that's higher for longer backdrop. Also, though, you seem to suggest here, Jason, you think this is another sector that benefits from the AI rollout.
I do. I mean, you've heard Jamie Dimon talk about this at length, right? There's over 400 applications, within JP Morgan via AI. And ultimately, as Michael pointed out, right, we're in this industrial renaissance of AI. Now with financials, Josh, you have to pick your spots, right? Not every financial is created equal. I really think that the mega banks, as I say, the too big to save banks, are well positioned here because the smaller banks still have a lot of CRE exposure, commercial real estate exposure on their books, and that makes me a little bit nervous. But ultimately, what we're seeing, at least with our advisor clients at Halo, is we're seeing people being defensive. They want to play offense with protection, and you have to pick your spots. And by doing that with derivative-based products and protection, I think is the prudent way to do it heading into the summer.
So what do you mean by that exactly?
Yeah, it's a great question. So ultimately, just as you wouldn't drive a car without insurance, you shouldn't invest without insurance. So we're seeing record volumes with advisors buying structured notes that are linked to major indices like the S&P 500. Europe is really popular right now. Japan's really popular. And they want to go long the index, but they want to go long with a level of downside protection, not just in case their macro thesis of US equities or international equities go wrong, but if one of these macro variables rears its ugly head. You have a multitude of elections, including one in this country coming up. You have the Fed, where we have no clue of what's going to happen this year. I have my own views, but Barron's doesn't think they're going to cut allegedly after their post this weekend. So you have a lot of macro boogeymen out there, but ultimately our clients still find a lot of attractive valuations in the market. They just want to dip in with protection in case, ultimately the market pulls back.
Michael, back to you. Another name I want your thoughts on. You say, telling viewers, you think APD is a buy. How come?
Sure. So Air Products, they're an industrial gas supplier. It's an oligopolistic industry, and there's only a few players around the globe. And one of their biggest competitors is Linde. Now, Linde over time has executed a lot better than Air Products, so they tend to get a premium. And Air Products has a little hair on it right now because they're embarking on some very large projects that they haven't done before, like green hydrogen products that really plays to the renewables angle. So there's some concern there that they won't be able to execute on time or on budget with those projects. But ultimately, we think those concerns are overblown, and that right now Air Products is trading at a very attractive multiple relative to its history, relative to the sector, and also relative to Linde.
And Jason, I also want to get your take on small caps. Now, we've been talking to some folks for a while now that like small caps, and they just haven't really delivered, I guess in part because we have not gotten the rate cuts that people were initially looking for. Do we need them to happen for small caps to catch up?
You do, and I think it goes back to the point of why people are investing with protection is sometimes they're early, and if you're early, you're wrong. And just as you pointed out, Julie, and people have been bullish on small caps for the last 2 years. When you look from a valuation perspective, they look quite attractive. There's a lot of reports out there that say that they're 20% undervalued historically to large caps. And I think that if you start to see a pullback or a rotation out of those, mega cap, the Magnificent Seven companies, you could see that capital allocated to small caps because of lower interest rates, and obviously small caps would benefit from that. But small caps also benefit from a strong dollar, which we're still seeing, and I continue to believe we'll see, and they benefit from a strong economy. So it's not just lower interest rates, although that will certainly be a tailwind for the sector as well.